Hello, welcome back. Paul de Klerk here once again. I am the Senior Financial Advisor at Paul de Klerk & Associates. In the last video, we spoke about all the different insurance options available to you and how they work together to give you a holistic solution to protect your family's financial future, no matter what happens to you. But in this video, we are going to talk about life insurance specifically. Now, the phrase I hear a lot out there goes something like this. Hey, it's just life insurance. You die and you get money. What else is there? Well, it turns out there is a little bit more to it than that. And very often, it's when people don't understand and consider the other factors involved in a life insurance policy. This is what often leads to problems getting the policy to work when it needs to be claimed. I'm going to quickly discuss those factors, and then I'm going to demonstrate a neat trick with Partners Life that can save you thousands of dollars on your insurance premiums over the life of your policy. So let's dig in. So let's get the obvious stuff out of the way. Life insurance pays out money when the insured person dies. And this money can help with a lot of things, such as generating ongoing income for the family by replacing the lost salary, reducing debts like a mortgage or hire purchases. It helps with paying for final expenses like a funeral, things like this. Maybe there are other things you want the life insurance to do, such as providing inheritance to children. The purpose of the money is entirely yours to decide. For me, when I speak to clients, I am looking primarily at two things. What is the salary of the client that we are trying to protect if they died? And what is the debt being carried by the household that we might want to clear if the person dies? If you want to work out how much life insurance is right for you, just be sure to go back to video number 1 in the series called Making Sense of Insurance. That's where I talk about that. Now, there are two ways to be paid your life insurance money. Just remember though, that not all insurance companies offer this great variety, but I'm going to show you the Partners Life policy because what they do is unique and it could make it worth thousands of dollars more without paying more in premiums. Okay, the first way is what everyone knows. It's the big fat lump sum check payout. This structure is helpful if you have lots of debts to pay off, like a mortgage or other loans, if you want to pay funeral costs, provide an inheritance, things like this. But what very few people know is that you actually have another option. And this option with Partners Life is massively cheaper to get. It's the monthly payments over time option. Partners Life calls it life income cover. Now, besides being massively cheaper, which I'm going to demonstrate in a minute, this structure is helpful to provide for lost income if the person dies. In other words, if a breadwinner who was earning a salary dies, life income cover helps to ensure that that salary keeps on paying out monthly over time. How long the payments last is entirely yours to decide. So, if your income is paid out weekly or monthly, whatever it is, then why not have the life insurance pay out the same way if the purpose of it is to provide for lost income? It just makes sense. But like I said, the real kicker is that this saves a lot of money in premium. Just stay tuned, I'm going to show you how in a minute. But first, let's talk about the 4 components of an insurance policy. It is vital that everyone understands the components, because if one of these components is wrong on your policy, the whole thing basically becomes unfit for purpose and you're just wasting money. The first 2 components everyone knows. Number 1 is the insured. This is the person who is covered if they died. So if I, Paul de Klerk as an example, I have life insurance on my life if I died, then I am the life insured. Number 2 is the benefit. This is how much money pays out to the policy owner if the insured person dies. This is entirely up to you to decide how much money this is. But in video number 1, I laid out some advice on how much would be appropriate. Number 3, this is where many people fall short in their policies. This is the policy owner. The policy owner is the person who will receive the money if the insured person dies. Now, this is dangerous ground because if you get the policy owner wrong, then the whole policy becomes a nightmare to claim. So if you are like most families out there taking out life insurance, the whole point of the insurance is to make sure that the surviving family gets paid the money if the person dies. Let's say that I die. The point of my life insurance is to pay the money to my wife so that she can use it, and it needs to pay out to her quickly. But what if my wife is not the policy owner? What if I died and I'm the sole policy owner? What happens then is that I will own the money if I died. But the problem is that I'm 6 feet under the ground. So where does the money go? It goes into my estate. And this estate will need to go through probate before my wife will see a cent. And that process can take many, many months. Not good. If you are a couple, then you need to make sure that both of you own your policy together. I cannot tell you how many times I get people send me their existing insurance policies, and this is the glaring weakness. They own their own policy. This is especially the case more often than not if I talk to somebody who has a policy at the bank. If you have insurance with the bank, I encourage you to take out your policy right now and contact me urgently if you're in this position. Okay, the last component is the structure. This is the decision of how you want the money to pay out. A big lump sum payment upfront is great, but it costs a lot more. Monthly payments can often do the same job, and it costs a lot less in premium. It can literally save thousands of dollars over time. Now, I quickly want to demonstrate how you can save a lot of money on life insurance with Partners Life. Just keep in mind that what I'm about to show you, only Partners Life does this. You cannot do it anywhere else. So, if you already have a life insurance policy somewhere, I'll bet that this structure will be cheaper. So let's dig in. Alright, well, first things first, let's try to work out how much money is appropriate to quote for life insurance. And as I said before, it all spins around income. So I have this little Excel spreadsheet here. I am 42 years old. I want to retire at 65 years old. So that means I have 23 years of working life left in me. And just let's say for illustration purposes that my income is $100,000 a year, just to make the math easy. That means that over time, I'm worth at least $2.3 million. This means if I die tomorrow and I'm earning $100,000 a year for the next 23 years, that is the amount of money that my family is going to miss out on if I die tomorrow. And that is what's paying for the whole show. The rent, the mortgage, the food, the fuel, the future plans, the kids, the dreams, everything comes out of that money. But now that's obviously just assuming that the $100,000 never increases over time, which will just be sad. So if I wanted to factor in a very small 1% annual wage increase over the next 23 years, then once I get to age 65, I might be closer to more like $2.8 million worth. By that stage, I might be earning $126,000. So I'm trying to be conservative. My point is, $1 million of life insurance is not really a lot of money in New Zealand if you think about what it needs to do for the family. So let's just work on $1 million worth of cover and see what are the different options out there, and we'll show you how Partners Life is way cheaper. So let me get rid of this, and let's pull out some options. Now, just for some context, how do we recognize a good deal when we see one? We'll work out the BNZ first, because I find a lot of people are there. There's the link if you wanted to go do this for yourself, or just flick me an email and I'll send you the link if you wanted to, but it's on their website. So if I wanted to work out $1 million worth of life insurance, I'm a male, I'm born the 24th of December 1978, and I'm a non-smoker. Click the button down below, which is calculate. They're saying $97 per month for $1 million upfront life insurance with the BNZ. Actually not too bad. But now, let's see, can we do better? Let's go to AIA. AIA does have some options. This is their quoting tool. Let me pop in my details here. My name is Paul de Klerk. I'm a male. I'm a non-smoker. I'm born the 24th of the 12th, 1978. I'm 42 years old. I am an insurance principal. I'm self-employed, yes, more than 3 years, business owner, and let's just say the $100,000 annual salary is what I get. All right, so let's add in the life insurance. $1 million, it'll increase every year, rate for age, calculate. Okay, a little better. It's gone from $97 a month at the BNZ to $88 a month with AIA. A lot better. Let's see what are the other options. I'm going to go to Partners Life. Just basically do the same thing. This is their quoting tool. Mr. Paul de Klerk. I'm born the 24th of the 12th, 1978. Non-smoker. I work in insurance. And I work more than 25 hours a week. I want to add on some lump sum life insurance for me. I'll click that. I'll just enter in the details there. $1 million. Basically $1 cheaper. Not so much between AIA and Partners Life, but that is the option that are available to there. So clearly, almost everyone's better than the bank if you ask me. But now, what are the options to make it even cheaper? Now, let's just talk about compounding interest and how this works. If I'm 42 years old and I have 23 years to go to retirement and I want to be paid out monthly, Partners Life offers a growth rate of a minimum 5% per year, and it compounds. And Albert Einstein once said, the most powerful force in the universe is compounding interest. So let's just say I don't want to have the big $1 million up front. I can take about a quarter of that up front, especially if I don't have large debt yet, like a house, right? Like a mortgage on a house. But if I died, then my wife can get $250,000. She can use that money for all sorts of things, such as paying off little debts, vehicle upgrades, things like this, flights you can tell I've got a funny accent. She might need to go to South Africa for a little bit, maybe putting a deposit, deposit on a house, all sorts of things that this $250,000 can be used for. But then what about the lost income of mine that's no longer going to come in anymore if I died? That's where $3,000 per month as the starting point that I can quote. She can get $3,000 per month every month for the next 15 years. Now, the point is that with Partners Life, with it growing at a minimum 5%, it doesn't stay at $3,000 per month. The following year, it's going to be $3,150. Year number 3, it'll be $3,307 per month. And you get the point. It just goes on and on. By the time you get to year number 15, my wife will be getting almost double per month than what she did at the start. If you add up all of the payments plus the $250 that she got, then it's worth a total of just over $1 million. So $1,026,828. So let's work that out in the quote. I'll go back to Partners Life, add some cover. I want to do the life income cover. So I'll click that box. I'll bring the life insurance down to $250. And I choose the minimum 5% option. It's no increase in premium for that great benefit, and nobody else does that. Now, when it says minimum 5%, if inflation in any given year, CPI, is more than 5%, then you'll actually get more. So this is a minimum that you'll get. And look at that now. I've got down to $70 a month. So with the bank, what was it? $97 per month. With AIA, it went down to $88 per month. And with this policy now, it's gone down to $70 per month with Partners Life. To me, that's a pretty big deal. But what if you don't want $3,000 per month? What if you want more than that? $3,000 just won't touch the sides. If you did it $4,000 per month, well, what will that be worth? That would be worth $1.285 million. Yeah, so if I put that down there and I made it $4,000 a month for 15 years, the two together becomes $1.285 million, something like this. Look, it's only $81 per month. It's still cheaper than a lump sum cover with the bank or with AIA. But AIA, look, let's be clear, they do also offer family protection. It does a similar thing. So if we downgrade to $250,000 lump sum upfront, and then we want to have a monthly sum assured of $3,000 per month. It'll index rate for age. It'll go for 15 years with the payments. What would that be? So it's gone from $88 a month down to $77. So it's $7 more than Partners Life. But here's the thing. It's not worth the same money. They do not guarantee the minimum 5% growth. So let's assume that over the next 15 years from now, that inflation will be, say, 2.5% over time. They say that that is probably going to be quite accurate. But if we do $3,000 per month at 2.5% interest rate, then look at that. Their policy is going to be worth $895,000. Now, with the minimum 5% at Partners Life, what did we say it was worth? 1,026,828. Over $100,000 more cover for the family, and it's still cheaper. I think you're starting to see the value. It's a bit of a no-brainer. Okay, let's wrap things up. Under this video, you will see some links to the Partners Life brochures and policy wordings for all those who are inclined to do an even deeper dive into the details and read up about these things. If you're not watching this from our website, then here is the link, pauldeklerk.co.nz/life. But coming up next, we will talk about trauma insurance in the next video. This is cover that pays out some money if you are diagnosed with a serious illness or condition as covered by the policy. Again, there are many insurers to choose from out there, and I'm going to show you why I have trusted Partners Life to insure my family when it comes to trauma cover. I will even show you independent research reports that demonstrate how and why Partners Life is the #1 trauma insurance provider in New Zealand. Until then, I'll see you in the next video, and take care out there. Bye-bye.